Moody's just downgraded the United States credit rating, and while that might sound like just another financial headline, it's actually a sign of something much bigger, something that could be incredibly bullish for Bitcoin. When Moody's lowers a country's credit rating, especially the US, it's a signal to the world that the lending to this government is getting riskier. The agency pointed towards rising fiscal deficits, growing debt, and surging interest payments that are becoming harder to manage. Right now, the U.S. national debt exceeds $36 trillion, and the cost of servicing that debt is skyrocketing due to higher interest rates. The Economic Policy Innovation Center projects that by 2030, over 20% of all federal tax revenue could go to paying interest. Imagine your paycheck, 20% of it, or 1/5, gone just to credit card interest before you even pay your rent or groceries. It's not sustainable, and that shakes confidence. The US dollar and treasury bonds have been long considered the safest asset in the world. They are the backbone of global finance. But when confidence starts to erode, investors need alternatives. This is where Bitcoin comes in. Bitcoin was created for moments like this. It's decentralized, global monetary network that isn't controlled by any government or any central bank. There will only ever be 21 million Bitcoin, no more, no less, unlike fiat currencies, which governments can print endlessly. Bitcoin's fixed supply prevents it from inflation and currency debasement. Historically, when governments lose control of their finances and start printing money to cover debt, inflation follows and investors seek safe havens like gold. But Bitcoin, often called digital gold, adds benefits that physical gold can't match. It's programmable, portable, and borderless. What's especially interesting right now is that major financial institutions and companies aren't just talking about Bitcoin, they're actively buying. Firms like BlackRock and Fidelity are pushing for Bitcoin spot ETFs, which allow investors to own actual Bitcoin through regulated stock exchanges. This makes it easier and safer for big investors like pension funds and mutual funds to get exposure to Bitcoin without the complexities of wallets and private keys. The value of assets under management for Bitcoin spot ETFs has exceeded $120 billion, and the last 4 weeks have seen positive net inflows into these products. MicroStrategy, Tesla, and other publicly traded companies have already converted parts of their balance sheets into Bitcoin, signaling confidence in its long-term value. These moves aren't just about speculation, they're strategic hedges against a weakening dollar and inflationary pressures. On a global scale, some central banks are even diversifying away from the dollar, and many investors see Bitcoin as a neutral, non-sovereign asset that doesn't carry the political risks that come with traditional currencies. So the downgrade from Moody's isn't just about numbers on a page, it's about the erosion of trust in the current financial system, and when this trust fades, people and institutions look for alternatives. Bitcoin offers a new narrative: scarcity, transparency, and also independence from political influence. Bitcoin still has volatility and risks. It's not a guaranteed winner overnight. But as the traditional financial system shows signs of strain, Bitcoin's case as a digital store of value strengthens. Every time the dollar's foundation weakens, Bitcoin's appeal grows. If you found this helpful, hit like, subscribe for more deep dives, and drop a comment below. What do you think? Is Bitcoin a hedge, or is it quietly becoming the future backbone of global finance? I'd love to hear your thoughts. Until next time, this is Cody the Coin Raptor signing out.